Hello, everyone! Welcome back to the RationalInvestor.com's Daily Brief. Actually, I did see somebody pop in here. Peter, I think, is. Let's make sure this YouTube is doing its thing. Hello, everyone! Welcome back to. Peter was. He's been sending me some awesome messages. He's totally scripted out my little day trading model. Day traders got kind of beat up here overnight, but nonetheless, trader's life: win, loss, scratch, scratch, win, scratch, loss, scratch, whatever. I suppose we can talk about that in a bit. I just noticed that Peter popped into the hangout here this morning, and I just wanted to, publicly acknowledge, just so you know, that I've been watching all your work on the scripting, and it's very impressive. So, just keep on keeping on, sir. Doing some fun work on the site, so way to go. But anyway, good morning, everybody. Kind of a weird start. Sorry about that. It is Thursday, October 17th. Got big options expiry. The monthly contract of the options coming up tomorrow. Normally on Thursdays we have the baby powder report with Julian, but unfortunately he's MIA this morning. So I have no idea if he's going to turn up here or not, but fingers crossed, maybe he will. Good old Brian. I suppose it's, I take it for granted because, it's just part of my being, but I really like consistency, dependability, reliability. If you're going to, say you're going to do something, do it. Here we are back in the saddle, daily brief. I don't think, has Brian even taken a day, is that a word? I haven't really taken much time off lately, and I like to make sure that you guys, who knows? Oh, God. But, we'll leave it at that. He's not here. Simple as that. All right. Looking at, and really, I'm not quite sure where I want to take this conversation today. It's kind of weird how I got into talking yesterday, and then I looked down, and it's like an hour later. Wow, where did the time go? So, this should be a fun adventure. And by all means, if you have questions, great opportunity through these daily briefs to interact. We did that's the sort of presentation yesterday on the yield curve. So I hope you got some good value out of that. And the person who asked, I haven't heard any feedback as to whether that actually helped them or not. Merchant, I think it was. I'm frankly speaking, I'm not even quite sure where we should start. I guess what I'll do is I'll just sort of do an overview. And then if something grabs my attention, maybe we'll just explore down that. And by all means, if you want to maybe post in the lounge or something like that, something you want me to look at, feel free to ask. It's kind of like free flying because, like I said, I actually expected a baby powder report here today. So I'm caught a little bit with my pants down, but we'll see how it goes. Let's see, where should we start? Risk on, risk off. Getting the impression that the risk offers were getting a little bit oversold. Maybe a little overdue for some dead cat bouncy type action. I did see out of the rags today, sort of watching the econs and watching the major news releases, that the market seems to have breathed a fairly big sigh of relief over Brexit. And we're starting to get sort of news headlines along these lines. UK agrees to best of worst possible Brexit deals. Last minute agreements, all that kind of talk. I don't know whether, we want to be sucked into the euphoria of this short-term enthusiasm about Brexit. But I did see, anecdotally things like, where are we here? Where are all my charts? Here we are. Euro continues to work its way higher. And more importantly, the US dollar index itself has this is a weekly price chart. You can see that weekly fractal that's fired. We're doing some technical damage now to this chart. I think you can argue the bull market, higher highs and higher lows, probably stays intact as long as this low holds. And I suppose you could argue just simple trend line support, probably down in this area, in that sort of 97 area. But this is sort of that, it's classic sort of risk off if this thing's rallying. And it was really interesting to see, and really this should be a really, really good journal entry for all you guys, how right in here was the first time I started to see news headlines and the talking heads and all that kind of stuff coming out and talking about how strong the U.S. dollar is, and how, oh my goodness, it's it's getting concerning and all that. And ironically enough, probably the public is thinking, oh, the U.S. dollar is super strong. It's only going to go up. Read all these news articles about how strong it is, and what direction does it go? The exact opposite direction. Almost cliche in a way. So I think over the short term, this is definitely what's got the market's sort of attention right now. And so as a result, ironically enough, historically, gold actually should do better in this kind of environment. If gold is priced in US dollars, then even if gold does nothing and the US dollar index falls, technically the gold price should go up. So, is this, major uncertainty about Brexit and what's going to happen in Europe pushes the US dollar up, and then we start getting some breakthroughs that the Brexit issue is going to be, settled and resolved? I don't know. What I am a little bit worried about here is this might, I would actually prefer, if you were a Euro bull, if you were a British pound bull, to actually see this market sort of bottom, and if anything, kind of trough into the Brexit event. And then on the other side, put in its base and rally on the news. So it's always a challenge to figure out what the hell the damn symbols are for the currency contracts these days, because they keep changing them. So is it E6? One exclamation. Nope. Is it E7? Oops, not R7. E7. Euro, there it is. Why they changed it to 7, I don't know. But I think you can start making the, if anything, actually, you know what would be kind of cool to do? Let's go over and how do we do that? Let's go see what the commitments to traders reports looks like. Actually, no, I don't want to do that. Let's go. Let's see what those Euro traders are up to these days. Actually, it might be interesting to check in on the gold. Let's see what these guys are up to. There we are. Interesting. So commercials are trying to bottom here. You can see institutions are trying to top. Off the weekly, haven't quite turned yet, so I would still consider this gold market at extremes. And it's these checks and the sort of resolution of the checks that we actually get like really good trending information. So, and a little concerned that the small specs are still very long there. So, nothing really new there. But what I wanted to see here was let's go see what those, and also the British pound. I'd be curious to see that, what's going on there. And of course, all these damn symbols have changed. 6. I don't think 6E is going to work anymore. Oh, what a headache all this is. Not quite sure why they went and changed all the symbols. 6J, well, no, it's just not going to work. So, anyway, what did we say that symbol was? It's E7. E7, 1, exclamation mark, enter. All right, well, let's see what these Euro traders are up to these days. Do 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 do. Are you going to load? Maybe you're not going to load. This is NA. Maybe the data isn't available on this thing yet. What happens if we go that E6? Does that come up with a quote for us? And as you can see, I'm very directionless this morning, everybody. Sorry. Oh, crap. You're not going to work for me. Oh, well, I tried. Actually, I've been really interested in cotton. Yeah, right down the bottom end of its range. Oh, well. I would have liked to have taken a look at that. Actually, it's interesting. I'm feeling like the Canadian dollar wants to move up a bit here. There's nothing really to write home about. We are getting a check here, but we definitely need to see this thing turn around. Before we get too excited. Oh well, I wanted to try and actually it'd be interesting. Let's go take a look at the corn. Let's see what these guys are up to here. Corn, do we get any data, usable data? Not really. Interesting to see the large specs are actually building, coming off of their massive shorts. And interesting commercials just sort of flatlining. So really not enough information to work with there yet. All right, so I just completely wasted everybody's time. Sorry, everyone. I had a thought, I went with it, and nothing came of it. All right, so U.S. dollar's still coming off here. And also, too, on top of the fact that the sort of Brexit probably maybe a bit of that fear of that, turning into a total disaster is unwinding a bit. So we're seeing capital maybe go back into U.S. dollar. I did notice that the British pound, and actually this might be interesting to see, just basically because of what Goldman Sachs there said the other day. Problem is, what the hell's the damn symbol? It drives you crazy. Nope. Or maybe it's 6B. There it is. Why is this one still 6 and the other one 7? I don't know. Anyway, so there is British pounds. Interesting. So probably Goldman saw this. So commercials, really good example of the commercials, being heavily short, adding to their longs. I beg your pardon. Commercials being heavily long, which implies down. And them adding to their shorts, and the institutions facilitating that trade being heavily short and adding to the trade, bear market. M top in the commercials, and keep in mind the commercials are like the smart money, suggesting that, and this is kind of what I was thinking with that gold, right? You saw it at extremes, and I sort of said, hey, it's at extremes, I want to check to tell me what the trend is. So top, they're in the commercials, they're working their way lower. Bottom in the institutions, there's Goldman Sachs. And probably Goldman Sachs came out, and I think they came out like right in here and said buy British pounds. So they probably saw this double bottom in the institutions, and they probably also saw they went on the order books and they went, holy shit, we bought a lot of British pounds here recently, because they are the ones that are buying to facilitate the selling out of the commercials and the hedgers. And I think Goldman came out here and said buy. I kind of thought we were going to have to come back down to these, candle body lows, 78.6 reload zones, all that. But nope, she said, I want higher. So, if anything, really good application of that COT data and how you could actually have seen that coming. So, actually, that's a good exercise. I think I'll probably throw that in the lounge if anybody wants to work on that. There it is. Interesting. And not a bad idea, especially Johnny Salmon. I know you guys are working on your Down Under report. I think it's probably in your best interest to start adding sort of a weekly scan. Do I see M's or W's in commercials and institutions in the COT report? So anyway, interesting sort of side note there. Sorry, everyone. So I get the impression that the trading community also saw this unwinding coming. So that's kind of interesting. The bonds have come off quite a bit here. I've got my little put up on. It's about 70-80% up, but I'm not really in any hurry. This is a TRI SOF trade. So I'm actually looking for the bonds ultimately to come down to this level here. So really no hurry there whatsoever to do anything. Kind of like the stock market, tons of gaps the whole way up here. I wouldn't be surprised if this thing has to rally right back up top here. So I'm not really going to do anything because this was a TRI SOF play. There's the trade. And if anything, I kind of want to add to the trade because, March is pretty far out there. Might buy like April or something. I don't know. So I get the impression that risk off trades, we're going to see some counter trend rally here. Feels like it, but we'll see what happens. Stock market, sort of the flip side of it. I had been talking yesterday about how I wanted to add to that put position and things like the S&P 500. We actually had the potential for a nice little inside bar failure there, and if that had happened this morning, I probably would have gone shopping. As you can see, we gapped open violently higher. We got as high as sort of just below this opening level here on this candle. Silly little gap is still open up top there. And this is the S&P 500. With October being such a big options contract, I wouldn't be surprised if we looked at this options open information and we find out, gee whiz, the whole thing's rigged. And I don't know whether you guys noticed or not, but I'm starting to, you've heard Brian ranting about this forever, especially around that drone attack thing with the crude oil market. In my opinion, I think that was blatant market manipulation. But I'm actually starting to see more and more talk in the marketplace that, hey, something's going on here. So they're calling it hanky-panky. But people are actually starting to connect the dots that there are some really, really big positions being put on in the market. And then Mr. Wonderful here comes along and just so happens to say something that helps the market move one direction or another. And all of a sudden, these guys make a shitload of money. So I got a funny feeling, this, and I sort of tweeted it out this morning. In fact, actually, the girl that made that comment that I just showed you there a moment ago, I asked her, and I don't even know where that is. Let's see, tweets and replies. I asked her specifically, this person, and maybe it's a man, I don't know. But I asked this person specifically to look into the manipulation of the oil markets. Because, I don't know, man. It just feels like, where the hell's the damn tweet? I don't understand how to use half of this crap. Anyway, there was a tweet that I basically was responding to, but oh, here it is here. God, how irritating. So I asked this person, Stephanie, so it's a woman, sorry. And there's also this William Cohen here working on this. I asked him, can you please look into the oil market? I'd love to see some sort of response to that, because I personally think that was totally manipulated. But I guess the point I'm trying to make here is I'm starting to see more and more people going, hey, wait a minute, there's something going on here, people. Now, these are the kind of things like Watergate starts out as nothing, and then it ends up heading in 20 different directions, and ultimately the president ends up resigning. Who knows where this goes, but I'm just glad to see that people in the marketplace are finally acknowledging that there's some blatant manipulation here. But we'll see how it goes. Only time will tell. Thought this was interesting, and this is actually a good piece for Jamie. So, Jamie, if you're watching this later on, I don't know whether you're watching this or not, but if somebody sees Jamie on the site, try and remember to maybe mention this to him. James Stack, I mean, first and foremost, this is a good history lesson. James Stack from InvestTech Research. I've been literally watching this guy for he's probably 20, 30 years. He's an ultimate sort of contrarian kind of investor. So at the top of markets, he's going to get all like, okay, get ready, get ready, get ready. And here's yet another warning sign of get ready. And you can see this is University of Michigan's Consumer Sentiment Index minus the Conference Board's Consumer Confidence Index. I won't go into the minutiae of the differences of the indexes here. You can I just posted in the lounge. You can read up on how this works. But, long and short of it here, bottom end of the range, recession, meltdown. Bottom end of the range, recession, meltdown. Bottom end of the range, nice W there. Look at these W's. Not so much of a W there. Recession, right? Here we are, bottom end of this range's relationship. I suppose we don't really see any W's yet, but coming from somebody like Mr. Stack, and like I said, I've been watching and following this guy forever. He's very, very good, and all he does is he just follows like insider purchases and stuff like that. But he's also very sort of classic contrarian. He will start, he will start telling you that your house is in trouble if he starts seeing smoke coming through the roof. There's no flames, right? And there's no, oh my God, the world is ending. He can just see the smoke coming through the rafters. And that's sort of how I would interpret a lot of what we're seeing. Kind of like the yield curve conversation that we had yesterday. We see this, there's, the old saying, where there's smoke, there's fire. Usually you see a little bit of smoke at the beginning, and I would argue that that's kind of like this. It's just yet more and more anecdotal information that we're coming to the end of the cycle. So I actually tweeted this out because I think it's it's good to have these things in your back pocket, and if somebody sees Jamie on the site. One of his sort of dot matrices is looking at the University of Michigan's Consumer Sentiment Index. This is a slightly different take, and it's a little bit more advanced because there's subtle differences between the Conference Board Consumer Index and the University of Michigan, and it's often a really good leading indicator. So there's a little tease for you. Anybody who's into top-down fundamental analysis, this is a really good read that I thought everybody should be aware of here this morning. So, with that said, bringing us back to sort of S&P conversations. I'm not quite sure how I got off on that tangent. Don't have an outright sell signal just as of yet. You can see trade location. Of course, we've got the big, October is a big quarterly month series. So it really shouldn't surprise us if we go out here. I bet you there's a lot of effery going on in the S&P markets right now and in the options markets around expiry tomorrow. So there is October, and we'll just look at all the expiring contracts. And you guys should be able to look at this and go, oh my God, that's a lot of money. I mean, keep in mind, at some point the index was down. I don't know whether it was down this low, but gee whiz, these are just massive numbers, eh? So, huge open interest in this. These are the quarterly contracts. So, hopefully, you see the big difference month to month. As we get closer and closer and closer to where we are right now, you can see the numbers start going up dramatically. 280, look at that. 128,000 options. All of them expired worthless, right? What's the price now? We're back at 298.67. We seem to be oscillating right back to this 300 level repeatedly, eh? So let's see how the option boys are going to do. 128,000 free money, cha-ching. 30,000 cha-ching. 40,000 cha-ching. 40,000 cha-ching. 32,000 cha-ching. 103,000 cha-fucking-ching. 285s. See you later. 44,000. 53,000 contracts. I mean, it just goes, oh, here's another one. Oh, look at this one. 120,000 contracts. Fuck me. I mean, hopefully you guys see after a while lots and lots of incentive to get that fucking stock market up, eh? 46,000, 12,000, 29, 78,294, 71,295s. So, where does it start petering out? Interesting how the 300 strike has 49,000 open interest. Can they get the market up above there tomorrow? The interesting thing is, even at the price it is right now, let's say, just hypothetically, Wall Street's average right price is $1.50 here. Then that means Wall Street wouldn't lose unless it was 301.50. So, but isn't this incredible, people? I mean, seriously, this is ridiculous. Should it really be this blatant that, just tons and tons and tons of contracts all through here? Once we get up above here, absolutely crickets, like literally nothing. Look how the open interest just completely collapses. Blatant market. I mean, this to me, when I see this, is just stunning. And then I suppose on the call side, probably, where would they ideally like the market to probably try and go out just under? Well, you can see, and this is actually kind of interesting. I mean, the calls are relatively thin. Look how heavy the calls get. Ooh, look at that. 300, 98,000. 303, 77,000. 305, 83,000. 80,000. 58,000. I mean, God, this is incredible, eh? 94,000 up here at 315. Fuck me. 70,000 here at 320. It's ridiculous. So, anyway, long and short of all this is, looks like they got a lot of incentive to try and make sure it looks like just on balance. They probably don't want it to go out above this 300 area. And then, the general rule, and level 3ers are doing this right now, is if you're going to use this information to try and figure out where Wall Street absolutely is expecting a floor, you want to look at the heaviest open interest contract. That appears to be this 290, 120,000 contracts. As you said just a moment ago, it looks to me like if they can settle the market out just somewhere maybe just underneath 300, then I think this is just an absolute colossal home run. Isn't that incredible? Absolutely incredible. And it just seems to happen month after month after month after month. Keep in mind, this is an important contract. This is the big quarterly contract. So, and you can see, obviously, the numbers are dramatically higher than the month-to-month numbers. But really, really good anecdote about options open interest. So, anyway, shouldn't surprise us that they 299.05. What a coincidence, right? They're just going to park the market right up there. It's just cboe.com. That's pretty straightforward. Is that, you mean this site? Who was that? Who asked that question? Somebody asked a question. Peter Arnold. Yeah, Peter, awesome scriptwriter. CBOEcorn.com. I thought you were going to say CBOEcorn. But also, too, Peter, for your reference, and actually great little segue. If we go into the library, under options, derivatives, and options, we actually have, I know Julian, he really likes to use these sites. Me personally, I just like to look at the hard numbers because the numbers themselves will speak to me. But there are a couple cute little websites that actually sort of create visual demonstrations of these. So you might want to pop into the library and bookmark that. So, if we look at SPY, and you can see there is that 290, all those puts, 280s, everything that I talked about there. You can see the calls ramp up there at 300. So if they could sneak the market out right in there, that would probably be the absolute best case scenario for them. I do know Julian has another site that he likes to follow too. I think it's called Apricot or something like that. So that's also there for your reference too, Peter. Did you see how I did that? All right, just come over here. Max Payne, I think it's called. So that's another resource there for you. So I don't think it should shock us that the stock market is where it is, given that options information. Let's see. Algonator's interesting to see. We're getting an Uber reading on the euro, but I don't think we're anywhere near a trade location, like structure to frame that trade. Not really seeing too many Ubers. Here comes an Uber on the yen, and I think that makes sense. We just sort of talked about this a few minutes ago. I'm feeling like a bond market counter trend rally, a gold market counter trend rally, a Japanese yen counter trend rally. It almost feels like you can feel something coming here. It feels like you can feel something. Stock markets not getting any algo signals, but you can see the down here in the short term. Like I said, if they can park this thing right around 300 into tomorrow, I think they basically won. And interesting, if we look at that S&P chart, you can see the original top here. I mean, there's nothing really new about any of this. So if we do get a nice little toppy here, I'm still, believe it or not, I'm still thinking, and call me crazy, you're crazy. I know a lot of people like to do that. I'm still thinking that into this window here, that's when the stock market's supposed to bottom. So, the irony of it all is we're still just playing with reload zones up here. Don't be shocked if this thing comes off a good chunk here. And you never know. I mean, if we get into stock market manipulation kind of talk, that can get really serious really quickly. All right. Anyway, individual stocks, nothing really to get too excited. I did notice that a couple of the names are perking up nicely here. I picked up some lumber stock recently, and actually they're more into sort of fabricated boarding. But nice to see some. And actually, I was getting a bit worried. I bought this weekly W, so I said I was going to buy this W and risk against these lows. And of course, the damn stock puts in this head and shoulders and starts working it was way down, and I'm like, oh, fuck me. Then all of a sudden, bang, 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 in 3 or 4 days, boom, right back up top. So we'll know that this trade is for real and it's rocking and rolling. These highs here, 33.31. As you can see, we're sitting 33.25. Today's high, 33.32. Show me a new high and I'll show you a buy. So I don't know what's going to happen here, but good looking stock, and now W's are being reconfirmed, so I'm feeling pretty positive about that. And also a few of our darlings from the spring seem to be jumping back up and sort of cleaning themselves up and getting ready for another run here. So I noticed like our little pharma name came off precipitously after that double level hit, but here comes an interesting W. I mean, we might harmonic out here, tough to say, but Always like to see W's on the price charts. Sonos, same sort of thing. Big jump. Another W coming in here. Could we be setting up for another leg higher? I hope so. I'm on the free position right now. Nothing to really do there. And there was one other one that was. Oh yeah, look at this little guy go. Ryan's little fashion stock. I think Casey found the idea, but same sort of thing. If we pop up, we got 200 SMA staring us in the face here. But if we pop up through this high, hopefully everybody can see W's. And if you zoom in, actually this thing painted a cute little W just there 2 days ago. So some of the names that we picked up through the late, the spring and the summer, and even this one, the late summer, it almost looks like they sort of went through a consolidation period. And if this market is going to move higher, they're getting ready for that next leg. Shipping stocks, I noticed that the Sono was right up against the top end of its range. Hopefully you can all understand the logic of why I like this thing, the W's and all that. I did notice that the other shipping stocks were kind of like, meh, nothing really to get excited about. NMCI just sort of sitting there at 210, beg your pardon. You can see the W. Probably like that little one that I just told you about. That this was Kevin's idea. And I saw this action down here, and I was like, fuck me, man. If this thing comes in, I so want to buy it. Again, reload zones, wait, don't chase. I think you could make the argument I was a little bit hasty. I saw the W here, and I just went, I got to get it. This thing may pull back. I mean, I think the beautiful, sexy buy was sort of right down in this area here. But I don't have a problem just sitting long this thing. But anyway, the point of the matter is shipping stock's not doing a heck of a lot here today. It's not really anything to mention, but this PDL, I mean, it's fascinating how we had, I think it was an AB equals CD, and it's just absolutely remarkable how these harmonic levels work. Boom, boom, boom. So it's just like literally it hit that level and it just stopped. Now I don't know which direction this guy's gonna go. I think I already told you I hopped off half of the position that I bought down here. But I just find that it's such a great anecdote that when these AB equals CD levels get hit, sometimes you just see literally the stock just stops, or the crypto or whatever. All right, so as I said earlier, not a hell of a lot to get too excited about. We want to keep an eye on this RMTI. This was one of Kevin's picks. Basically right down at the bottom end of the range. Did get a potential little inside bar, but that was broken with yesterday's action. So, we'll see how this goes here, but gee whiz, very interesting level there. Yeah, not a hell of a lot else to rant and rave about here. Okay, so let's head on over to crypto now. Quick overview. I've been sort of looking for dumps against this yellow line into reload zones. This was a 50% retracement of this range. We're just, gee whiz, what a coincidence. We are still oscillating around that big 50% level. Not really anything new. What did I do with that chart? Here it is. Conversation, the message hasn't really changed here. This is a weekly price chart, so internally everybody should look at this and go, yeah, okay, I think the bull is on pause. And kind of like what we saw through here, you see how long it took for the bull to actually stop the pause, stop the down, and actually form a bottom and start the up. And really, I hate to say it, guys, but, try and learn this, because, you guys want to make money for the rest of your life. if there was like one area, and keep in mind this is all nothing, 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 and then all of a sudden we get like this kind of stuff, right? The W, that should jump out at everybody. The bullish divergence, that should jump out at everybody. You see OBV after a long down starts turning back up. You can see the volume bars are starting to accelerate. So, I mean, everything here is like cliche of what bottoms look like, but do we have that now? And clearly the answer is no. So, unlike, W's and W's and W's, we got M. We got a bear divergence. We got M's and we got lower highs and lower lows. That, really, the problem here is that people don't really want to hear the market message. I mean, anybody who's sort of sitting here and going, what's the market's message? Does this look WE or does this look ME? I have to say, it still looks ME, guys. It's going to take some time for this to clean up. Like I said, this is a weekly price chart. I'm not quite sure how people come up with moon kind of calls and all that kind of stuff. If anything, what I think has to end up happening here is we have to hit technical objectives. Then when we hit those sort of price level objectives, then we have to look down at our indicators and go, okay, well, do we see signs of bullishness? And, off of something like an investor's sort of time frame, there just isn't anything to do here. And I do find it interesting that you come on, crypto Twitter, and one day they're all insanely bullish, the next day they're all insanely bearish, and yet the weekly message really hasn't changed a hell of a lot here. I do know that some people on the site were hunting like bullish setups off of lower time frames on some of these names. I think this has failed, and I think, AB equals CDs. We could probably still work our way a bit lower here. Here comes another little double bottom. I mean, maybe this is now El Tangonator, or the bot's definitely gone here. I suppose we might see things like 50% bounces. Yeah, 50% roll. There we go. So 184.65, which would do nothing more than just bring us back into this original sort of breakout level that was a head fake. Could you make money buying this W? Risking against these lows, looking to take profits at the 50% roll. Well, just about 2 to 1. That's pretty close. Not really the best MACD div. Very sloppy. Pretty good looking momentum turn here in the oscillators. And I guess you could make the argument the bear kind of fell asleep and the bull's waking up, so there's W's and OBV. But at the most, all this is just a lower time frame setup. Certainly nothing sort of investment grade yet. And we zoom back out to the weekly charts. If anything, these ones look better than Bitcoin. At least here you've got the smatterings of a W. The smatterings of a W. Nothing really solid here yet. Willie isn't technically stupidly oversold yet. It's at 75.9, so it's still got another 4 ticks to go to oversold. And then, of course, seasonality. Oh, my goodness. This is not the time of year for us to be getting too bullish about crypto. I know there's a bazillion lines in here. It's probably impossible to see it. But if anything, what I'm worried about here is now we have lost this uptrend from the spring. And if we get any sort of signs of market structure on the other side of this trend line, that could be problematic. And I also noticed Litecoin's just sort of sitting down at the bottom end of its range, same sort of thing. We actually came down Kind of busted probably day traders out. But, those people that were hunting this weekly weekly inside bar, that level, that market has not gone to new low yet here. Actually, I think that has to be off of that low there. Come on, you. But just sort of, very floundery. I think you can make the argument Litecoin hasn't broken down here on this weekly inside bar yet, too. But my hunch is probably just like that Ethereum. There was probably a nice push up, and then we just fell out of bed on the other side of that potential breakout. All right, so yep, there it is. So there is that weekly inside bar, and it was a W. You can see the noticeable battle at the breakout level. Rock and roll. Are we chugging? Uh-oh. Bear divergence potentially coming in. And then we just melt right back down. If anything, wow, that looks cool. So the lower time frame traders, I wouldn't have a problem if you said, look at, I like W's and I'm going to risk to new lows, and you get that weekly inside bar still working. Ironically enough, just to get a 2-to-1 is not even breaking out of these highs. It's just testing that high. So the traders out there, again, lower time frame, not investors. Investors still pointing down. The traders out there who can identify these and 50% is right to there. This is probably like a trader's kind of trade. Wait a minute. If you took there, 1.56. Yeah, it's okay. I can't understand traders doing that. But even if you said, look at, the weekly inside bar came, show me a nice little W. I'm going to risk against these lows, this original fractal, but I'm going to be a little sneaky and try and sneak in off the bottom. I think that's that trade there. And of course, if this weekly inside bar holds and you're long from here, wow, you're just awesome. You are just awesome, my friend. All right, so that's sort of if anything, I kind of like this Litecoin chart because I think it sort of talks a little bit about what I'm seeing in the market right now. This is a trader's market, totally. I've said this repeatedly, but some people don't like it, others do. But I definitely think this is a kind of example of a coin pickers, pro traders trade setup here. But for the investors, bigger picture, mom and pop, that kind of stuff. I'm not a trader. I just want to put some money to work in the market off the higher time frames. You can see trade location, risk to new lows. I really wouldn't have a problem with that. But internally, I don't see that much anecdotal evidence that we've actually turned back up here in earnest. I think we're still going through the bottoming process. Now, it's interesting because, Bitcoin's chopping around all over the place here. Same sort of thing. I don't really think this is the best investor sort of level. Where I'd be interested in investment wise. And where's that weekly chart again? Where'd it go? Over here. I sort of started off the conversation. This is all a talk, and I talked about this yesterday. It's all a talk about the battle at the 30 SMA. Can it recapture it off the weeklies? Turns out the 200 SMA off the dailies looks almost exactly the same. And then, we showed you Ethereum and Litecoin have had those moving average crossover reversal bear signals. Is it really just a question of when does Bitcoin do it? I think so. And then if we do get any kind of substantial rally, these moving averages and these old lows are going to be just a brick wall of resistance. So, with all that said, and then of course we had said just the other day that medium term signals, sort of swing trader, if you will. This original trend line is still very active. Nothing's changed there at all. Quite sure what I was doing here, but anyway. We did have this very little. Come on, you. We did have this very little uptrend line, and I distinctly remember that, and in the daily brief recap video I did yesterday, I had talked about how I was hoping for a nice little zing down here to hit the 50% level, so then, bot traders are like, phew, nothing to sweat about. But as it stands, I think our little uptrend line here did support price. And now we're coming back up and testing the downtrend line. And notice that that's basically at the bot entry level. I think the algo wise, and it's actually interesting. I haven't done it before, but we could definitely consider it. Start adding in things like Grimm's application of the bot trading rules to these kind of setups. You can see move stop to scratch level, 50% of the anticipated move. Technically, it has been hit, I wouldn't have a problem if you took this algo signal and said, look at Brian, I don't want a winning trade to turn into a losing trade. So if she does come back to this level, I'll just hop off and wait for a new signal. That really wouldn't bother me whatsoever. But at the same time, too, I'm just going to watch this play out, see whether it does hit the 2-to-1 or not. My hunch is that it does, but so what? That's just Brian's opinion. It doesn't mean jack shit. So and keep in mind too that this is a pretty damn big setup. If we do fall apart here, oh boy, it could be ugly. So remember we had a bot setup that had me short from like up here. And then on this move right here, so I was short, and on this move here, I got stopped at scratch. And then, like literally a day or two later, the floor fell out of the market. I got a funny feeling that's exactly the same thing that's going to happen here. You sneak yourself into a really nice position, right? And then they wiggle the market a little bit to get you out. And then all hell breaks loose. So, we looked at the weekly chart. The weekly chart speaks for itself. I suppose, looking at the daily chart, and I always liked, oh, Jesus, there's a new signal that just came in. This crazy day trader, man, is he ever busy? And sometimes, you actually, and you got to tell you guys, this is such a day trader's life. But sometimes you're like, holy Jesus, 2 losers in a row, 3 losers in a row. Like this one, we had 1, 2, 3 losers in a row. And yet you can't lose focus. Look at that in the 4th trader. Bang, wins. I got no idea whether this thing's going to hit its level, but I did say I was going to keep a close eye on this and just see whether, what does the data of this setup represent. So. You can see another inside bar fired here. So is that 2-to-1? Yeah. So let's see what happens. Okay, where was I going with that? So if we look at this perspective, and I kind of like this just as sort of like a nice sort of like barometer reading. Institutional bias still pointing down. Could we, and this might be it. What time is it? Oh, yeah, okay, well, coming up on the end of the hour. This isn't a bad opportunity for us just to check in and see what the Brian's crazy moving averages are saying. My hunch is they're exactly the same. Show. There we are. So, whoops. Is that right? Show. Okay, so you can see Brian's moving averages are basically the same. Interesting. We said we had an institutional bear signal here. I think you could make the argument Brian's moving averages turned down here. So Brian actually never got sucked into this institutional bias long setup here. Brian's just been staying bearish for quite a while here. Wait a minute, am I reading this right? So, I guess that actually turned bullish there. Okay, that makes sense. And then Brian's moving averages. So the institutions turned bear there. Brian turned bear there. I suppose that's slight semantics, but nonetheless, it is what it is. I suppose I should probably put that there. You can see Brian's moving average bias still very much down. I mean, nothing's really changed here. But just a really a good sort of, in fact, actually, maybe, we're running out of time. Let's put this back to the way it was. All right, so there we go. As long as this daily chart is pointing down, the moving averages are pointing down, we know that the trend is down. And of course that weekly chart, we talked about it, and this was really interesting, that daily chart, because it's almost a carbon copy of the weekly, but just off the daily, in that these moving averages, right, they almost look exactly the same. It's quite remarkable, really. So there is that 200 period. There is this. This is the 50 period. Actually, it might be interesting to also just check out and see what Brian's moving average looks like. There we go. And we'll put away 50 for now. There we go. Oh, interesting. Did I do that right? Show 30, show 200, 30, 200. Yeah, that is right. Huh. So Brian's system actually has already got across here. So it's already turned bearish on the dailies. Interesting. Are we thinking down? Yeah, I think generally speaking. And swing traders have bots and algos working short, and the day traders, as you can see, and it's kind of funny because I did this video yesterday, and we just went through a massive trending market state, and it's like win, 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 win. Oh man, I'm so cool. And then the market untrends and scratch. Oh, okay, we still got a win. And then loss, loss, loss. Oh, okay, I'm not bulletproof after all. Then win, loss, and here's another one working away. And it's just such a great anecdote of a trader's life. You don't know what the fuck's going to happen. Just, you've got your higher time frames. You got your 3 reasons. Get in there. Take every damn setup, log, journal, and just live with the results. And I got to tell you, I mean, 1 month's worth of work just following this darn thing. Almost the better part of 1 full Bitcoin on 1 Bitcoin. The only issue here, of course, and we've talked about this lots on the site, is commissions. And what is the implication of commissions for this model? So with that in mind, I've actually started to how do you say this? Consider the model on different markets. That took a lot to say. So I've started to sort of, put the model together off of things like this is the crude oil market. I actually did a really cool study, and I think I've labeled this the euro, because I did a cool study off of the euro last night. I don't know whether I've lost that chart. It was so far back because I just changed the symbol here. But you can see I was working away throughout, just trying to figure out all the levels and what do the trades look like, etc. But I put one together on the euro last night. Let's see if we can get back there. I don't know whether we can or not. Might have been too far ago. And I think you could make an argument. You could build one of these matrices off of every single market that you're interested in, you want to follow. It'd be a pain in the butt, but you can definitely do it. In essence, these almost become consoles in themselves. There we are. There's the euro. And it was interesting to see, right? So I basically wrote up here was the daily bull signal. I had to wait. There was the 4 hour signals. I had to wait for the 1 hours to finally give us something to actually get excited about, and there was a double bottom that came in, kind of a head fake. So as of this point, I could start hunting setups, and it's actually interesting because even in this study, I included scratch, loss, as the market was still hadn't broken out. Then nice juicy win here, win, loss, win. Same thing as the Bitcoin. This one, I don't know whether we call that a win or not. I think so. Oh, no, scratch. Oh, so here, if anything, this is a great example. I mean, talk about frustration. Such a good example of a trader's life. You've got your fractal, you've got your signal level. These numbers don't look right. Is that right? It should be 10760. Yeah, because, oops, not like that. The minimum movement here is 0.5. And, we have to go through and figure out whether, what's the commission implication and all that kind of stuff. Actually, okay, so it's actually not as bad as I thought on this one. But, there's the fractal. Move stop to scratch. And look how close it came to your target objective. And then you had to get stopped out at scratch. I mean, it happens. It's a trader's life. So, I just wanted to give an update to the community that I've started to just simply, I've done 100 trades now on the corn. And we'll just, I'll just keep following along. I like doing this work. It's interesting. It keeps my brain active. And now we're going to see how this looks on the euro. And actually, on that spreadsheet that I put together, I've added a tab for euro. So here is the Bitcoin one. Down here, Bitcoin. And now I've got one for euro. Haven't started to fill it out yet. Still trying to figure out what the a good sort of risk per trade is. Still don't quite know exactly what I want to work with. So like I said, I'm in the process of vetting out now this on the euro. Okay, we're getting past the top of the hour. I've been blabbing away for a while. So maybe just a quick boo at some of the alts, and then we'll sort of send you on your way. Looking at the relationships intermarket, we kind of talked about this yesterday. It's nice to see at least Joshua's FA list is now flatlining. The alts indexes, probably with Ethereums and Litecoins and stuff, they showing signs of V bottoms. At least that's encouraging. We're not continuing to go down. Interesting to see market cap, that dominance kind of conversation continues to work lower, making lower highs and lower lows. So I do believe that it's almost like, this is sort of the beginning of trend. Then, Wyckoff checks. It almost feels like this thing's got a bit of inertia behind it now. So, let's see where this goes. But I definitely think you can make the argument the trend now in the short term is back in the alt's favor. So that's encouraging. I never can understand the definitions of these things. But you can see, I think that they are sort of, if these things W out and start moving higher, it implies that altcoins are feeling a little bit better. I think that's the case. Not positive, but there are smarter people on this site that know these crypto proxies a lot better than Brian. So nonetheless, we are, at the very least not making new lows. That's always encouraging after 2 years of crap here. And we're actually starting to, paint W's, higher highs and higher lows. We'll see how we go. We do have a nasty little M right here in the short term. But as the primary message out of this, I think, is just the fact that dominance did make a new low here this morning, so that's good. looking at some individual names, there's an absolute darling in this space that, really I don't even think is it. And the funny thing is about crypto is I still don't understand what the fundamental use case of something like a Doge is. To me, Doge really represents more like a sentiment proxy in this space, just because it's very popular sort of counterculture, sort of what's the term I would use? Stick it to the man kind of thing, that kind of talk. From what I understand, it has a fairly robust blockchain, and more importantly, it has a very robust user base. And so as a result, it's not like it's going to go anywhere, go off the board kind of idea. I mean, I think Doge blockchain is here. And because it has that sort of sentiment sort of part of it, it's not like it just disappears. As you can see, the market has moved higher since I even drew this study last night. I tweeted this out last night, but I think, again, I've said this before, and, I hate how people sort of twist my words, and, something doesn't happen to their liking, and then they go and they say, well, you said this and you said that. I mean, it's just Brian's opinion. Remember, everything that you're hearing here is just Brian's opinion. That doesn't mean it's guaranteed. That doesn't mean it's going to work. It doesn't mean it's not going to work. It's just Brian's opinion. But, on that note, put out a nice tweet yesterday saying, I can see a bunch of reasons for this thing to rally. I can see a bunch of reasons for a trade. Traders got to trade. The interesting thing about this is I'm actually pretty embarrassed by this story. And if anything, I think it's a really good anecdote that Brian would like to be a professional. He sure would like to consider himself a professional. Like to think of myself as a good role model for you guys. But I fucked this trade up. I'll completely, admittedly admit to you that I completely fucked this up. And it was interesting because the sort of fuck up all happened around I was moving. And then we had TRI meetup. And I completely disconnected. Now, what was my fuck up? My fuck up was that, how many times can I say fucking piss YouTube off here? My fuck up, fuck. Don't get Chinaed. Remember we used to do that? We were joking before we started the video today. We used to, Rob's here, and it was almost funny. We almost had like a herd of animals that would all sort of check in. And remember we used to do drinking games, right? Don't get Chinaed. Good old days. Anyway, it's nice to see Rob in the call this morning. And can you give us a roll, Rob? Are you there? Maybe he's gone. Meow! Roar! There he is. Anybody who's been on the site for years probably remembers that from days gone by. Nice. Anyway, so Brian bought this original W, and I said that, well, I'm going to trade this thing. I want to demonstrate trade. So that meant I was going to buy the W, and I was going to risk to a break of these lows. I suppose you could argue that, and I suppose, how many times can I say suppose now? The 50% target was there. Could we make the argument that 50% of the anticipated move was made? That's what that is. And you should move your stop to scratch? I think I could have. That's definitely not unrealistic. It's not, half decent plan. But then the market came back down, and then, like I said, it was moving, TRI meetup, all that kind of craziness. And I ended up just not doing anything when the market broke down here, which is a failure on my part. Should have reported on the site. Doge broke down, booked my loss, walked away. But for some reason, maybe it was just subconsciously the price was so low and the bet size was so small that I just sort of disregarded it. It's probably more ego, but this was a failing on my part. I completely admit it. I think in this kind of case, this is where sometimes actually it's better to be lucky than it is to be actually good. So I think in this case we actually went and carved out the bottom following the first breakdown, and I should be reporting to you that all right, I've got a new setup and I've got to come back in on the long side here. I haven't reported that because I'm very embarrassed by the fact that I fucked this trade up, and I'm not being a good demonstrator of best practices here for you guys. So I'm not going to tout this. I'm not going to, if we do, and, ironically enough, we're actually up on the trade right now. But I'm not going to take any sort of like, ooh, Brian's so smart, Brian's a great trader. This is a failing on my part. Having said that, I'm just going to leave it alone and let's see what happens. If we're lucky, then we get a nice little pop up into 50% rules. And, looking back in hindsight, like I said, sometimes it's better to be lucky than to be good. I will say that the tweet that I put out was that, if you did want to participate in this, and I think this is a legit Head and Shoulders. I also like the fact, and we talked about this, Linda Bradford-Ratchke says, take 2 shots off of a setup. So here's a good example where the first attempt fails and the second attempt actually works. Unfortunately, we're really not allowed to chase up here. So, if you did want to participate in this, I would watch this, what is that, 25 up to 27 sats kind of idea. Actually, did I draw that right? Yeah. What a coincidence. Mountain Man 61.8 is going to be that Head and Shoulders breakout level. So, and the interesting thing about Doge is, and this is what I really jumped out at me, and I'm talking way too much as always, but I'll finish off with this. Do you guys remember last year? And I don't know whether it was last year, maybe it was even the year before, who knows? But Bitcoin took almost exactly 1 calendar year to go from its top to its bottom, right? Do you guys remember that? And I gotta find that chart where I put those cool little time studies on, because I kind of eyeballed it here the other day, but it's not really that great of a job. But anyway, so this was supposed to be 52 weeks. Yeah, right there. So 52 bars, basically exactly 1 year from top to bottom. And in a weird sort of way, when you see something like that, that's a tell that, hey, this has got Mr. Gann written all over it. 365 days, basically from top to bottom. So what do you think the odds are that in half this time we're going to see a 50% retracement? I'd say pretty damn good. This has got sort of, Joshua's sort of karmic universe finger stamp all over it. Marat, he loves dealing with pi and numbers here. Right? This almost feels like this isn't even anything about Doge. It's nothing about the community. It's nothing about, the developers. This is all just algorithm. Yeah, I mean, it's the algorithmic nature of the universe taking over here. So, I mean, even at 35 sats, if you got a pretty high probability that by sometime around mid-March, we're going to be at 66. Well, gee whiz, that's almost a double even from here. But I would seriously consider taking a look at this. It's a good-looking name, of course, sentiment-wise. They've got lots of fun community. They've got their DogeCon coming up here for next summer. Alex Stirk, he loves to promote all that. And interesting enough, Alex Stirk himself, Mr. Fundamental kind of guy, said, anytime Doge goes below 40 cents, you got to buy it. So, here we are, sort of in that window. And keep in mind, the Doge kids, they're going to get paid. They are. So I wouldn't even be surprised if this rally actually funds next summer's meetup. So here is another anecdotal piece of evidence of this market slowly turning here and altcoins starting to get sexier and sexier and sexier. I have seen lots of people posting, hey, look at this one. Hey, look at that one. You know, this is one that Josh was just pointing out here in the lounge as we speak. I mean, this is everything that we teach in the program, guys. I mean, you see how far it's come down. I would even say probably you can even see higher levels here, Joshua. But, you know, you can see the very wide base that it's trying to form. And here, gee whiz, here comes a big fat W coming in here. And you look at the internals. And, you know, like I said before, I've said this repeatedly. This is why I really like this site, is you just come into the lounge. I mean, learn this stuff about M's and W's, indicator divergences, trade location tools, put it all together. I was having a really interesting conversation with a guy who's actually in the, we'll call it, he's in the agricultural industry yesterday. Maybe you know where I'm going with all that. But he was at, actually his name is Louis. And actually there's a few people that are locals here. Andrew, I was talking with him yesterday. Colin here saying 3-1 bought on DAT. Anyway, and he was explaining to me about the growing process and agriculture and being a farmer and all that. And he says it's actually incredibly simple. It's just you have to rinse and repeat and do the same things day in, day out, and don't just, you know, leave your crop and come back in 2 weeks and expect it to just be doing perfectly fine. It takes work every day. So, ironically enough, being a trader in a trader's life, it's the exact same damn thing. You know, learn this craft about what do markets in transition look like. All the level oneers should have just learned what head and shoulders is look like. Of course, you hear Brian talking about M's and W's. And, you know, what do you think the odds are that if we pull up the momentum indicators, there's signs of divergence down in here? I'd say probably pretty darn good. I've already been talking for an hour and 20 minutes, so I think I'll probably leave it at that for today. But the point here is that it looks to me like I think this is an interesting little shopping window here. So if you can participate, hunt those setups. It looks to me like there is some money to be made. Ironically enough, I don't think the money right now to be made is off the little guys. And actually I did notice, off the big boys. I got that backwards. But I did notice that things like the BNB, which I think is an excellent sort of proxy for altcoin space speculation. You can see the W is in here, right? This is a daily chart off of Binance. And I do like to look at these versus dollar so that it just sort of tells me whether, you know, versus stable assets, whether this is actually bottomed or not. So really, I think that, you know, sort of like speculative part of the market, we won't really call this failed and broken down and we're back in the pooper until I see this BNB probably lose, you know, that kind of, and actually I don't know what's this low? 1650, it is this low, yeah. So until we actually start losing this trend line in earnest. And actually interesting how yesterday we were flirting with it and today we're like, no. So, you know, keep your eyes peeled. But like I said, as long as I'm seeing this thing making higher highs and higher lows, as long as I'm seeing Joshua's charts trying to bottom here, as long as I'm still seeing dominance rolling over here, I think actually this isn't a bad little market state to go thinking about some altcoins. Call me crazy, but it's not a bad looking market. Okay, I think I better shut up now. Jeez whiz, I talk way too much. Have yourselves a great day, everybody. Thank you so much, Kevin, for being on the ball, helping me. I have no idea if we're going to see Julian or not, but yeah, well, it is what it is. So have yourselves a great day, everybody. All the best, and bye for now.